Hi, folks. This is Lee. We're looking at the ETF markets and trying to make some sense of them, so we call it ETF Market Sense. This is for the week of March 23rd, 2021. The charts in this presentation come to us from the Trade Navigator software, and this first chart is the TLT. That represents the longer-term U.S. Treasury bonds, and we're seeing a little sign of life for the first time in quite some time. They've made it back up to the middle moving average here, which is around 137.24. Am I right about that? 137.24 is that middle moving average. That is the first time they have touched that since the first of the year here. So that's, doesn't mean anything's bouncing big time, but it's at least some signs of life. And they are actually, if they hold that, they could turn right back down again. And the lower area we have here is 132.92 would be the next target down here. But they're actually acting like they might try to go above this. Now, that's a little surprising to just break it the first time you get back to it, but they could. And if they do that, then it looks like they're targeting 139.56 is the next possible upside. You'd think they've been beaten down hard enough they would be due for a bounce, but at this point there's no reason to believe this is any type of long-term low, just a bounce. So be a little cautious, but it kind of looks like they might be trying to get a little higher. If they do get to the 139.56 area, they have to look for reasons to try to sell them there, I believe. In the stocks, this is the S&P 500 representation, the SPY, and this is really interesting here. We basically have support at 388 even and resistance at 394.90. They've been relatively close to both of them and haven't traded either of them. They just seem sort of stuck in the middle here. Last week we were at all-time highs, but they came off of those and closed down on the day now, or the week that is. That sometimes can indicate a short-term top at least. And this looks like they're just consolidating, trying to figure things out. We don't have a whole lot of economic news to jolt the market this week. I think probably Thursday's combination of GDP and weekly employment is the most likely catalyst. But, maybe some sort of surprise will hit them. At this point, I can't be surprised if they just stay between here and consolidate what they did last week. Hard to develop any probabilities for direction here. They haven't traded either of them. They may not. If we go to the NASDAQ version, the QQQ here, you can see we've got a similar situation. Support around 312.48, resistance 322.80, and they have traded neither of those. Of course, this is a much different situation than the SPY because they're nowhere near the all-time highs at this point. The last week did move higher and then close back down, and this week is just kind of inside of that, not trading either support or resistance, so no real concept of what's going on here, no real energy in the market, it seems. You tend to favor the upside. We're still in a bull market despite this big sell-off here. We're still in a bull market, so you have to favor the upside if they're going to do anything. But I'm not sure I'd want to buy support if they drop down that far now, and so maybe they can go through resistance, maybe they can't, but it just doesn't look like there's a whole heck of a lot to do here. They're not offering a whole lot of clues. So, unfortunately, that's all we've got for you today. I hope you can find something profitable to get yourself into, but thanks for checking in to see what we're looking at.